It's the season where if you've not already made travel plans, you're possibly wondering why. But a great time to get a sense of what's happening in the hospitality space. And we have Sanjay Sethi, MD and CEO of Chalet Hotels, in our studio. Sanjay, so great to have you in the studio this morning to talk about an interesting time.
Pleasure to be back. I think I came to the earlier studio. This is the first time on this one.
Bit of an upgrade, huh? Bit of an upgrade.
Facility, yeah.
Much like your hotels.
Congratulations. I believe you've been given the honorary title of doctor. Is that?
I'm very, very humbled and grateful for that.
For all your contribution in the sector, so congratulations.
Pleasure. Thank you.
Okay.
Thanks so much.
So Dr. Sethi, what is the prescription looking like for the travel industry? For the travel industry in this season, are you seeing that kind of excitement rev up, and is it the wedding season which is providing the boost?
I think a bit of all, and I much like other doctors, I don't need to caveat this. I'm pretty confident that the season looks very strong, both on the leisure and the business travel side. Both of them will be supported by MICE and wedding business and segments. They're clearly going to be very strong. So far, the trends for H2, what we have, look like comfortable double-digit growth again.
Okay. And what segments do you see leading the way over here?
Clearly, this is going to be the primary season for corporate travelers. October to March is the season for especially international business travelers to come into India. That's going to drive that. And like you mentioned, wedding and MICE is going to be a big ticket item.
Okay. Sanjay, okay, a bit of a deviation from this season, which looks very, very strong. I just wonder, actually, just before we get to the deviation, how much of an uptick does such heavy booking lead for, let's say, one, ARRs, and two, the overall pie that the non-room revenue gets for you? Because I don't quite know the split right now, but I'm guessing it is not as skewed towards room rates as it was maybe 5 years ago.
Well, it still is. F&B has picked up a little bit from 5 years back. But at least in our portfolio, F&B is still 35% of the total revenue.
Okay.
Around 60% comes from room revenue, and the balance delta is through the other income that we get from other segments. But look, F&B is always very strong in the second half. That will continue to do well. But then the occupancies and room rates will also climb over H1. So I see that growing pretty aggressively.
Okay. The other aspect is what some of your peers have told us in the last couple of weeks, that while this cycle started, let's say maybe 2 years or 3 years ago, what have you, I mean, once the COVID restrictions went off, if typically hotel cycles lasted 5 years until supply came in, if India continues to grow at 6%, 7%, what have you, then this might not be cyclical actually. This might last for a really long time. I would love to know how you think about it.
So, Neeraj, I'll put my bet on maybe a 3 or 4 year window for now.
From here on?
From here onwards, which is that the supply will be slow and demand will outpace supply by a significant margin. And I think that's going to continue to push occupancies and rates up for the next 3 to 4 years.
Wow.
Listen, Sethi, Dr. Sethi, you've aggressively talked about how expansion is core to growth, and we all agree, right? With the kind of demand that we're seeing, supply is required. What we did notice in the numbers is while revenue is growing, margins have not improved significantly. And you yourself have said this, that the pressure on us is to deliver high margins and high returns on new investments. You want to tell me about how you feel about this? The ROI is what shareholders are going to care about.
Sabina, very true. Look, we look at each investment that we do afresh with a very focused individual asset assessment. And from our perspective, each asset should give northwards of 15% IRRs on its own, and better if we can do that. So therefore, when I said that we are under pressure to give high margins, it's on the back of a story which has been very strong, and therefore we are spoiled by our own numbers, and any new investments will need to give us that equivalent or better numbers.
Okay, and you talked about how the season is about corporate travel. We've got that 11 acres in Goa, which is what, 170 rooms that we're talking about.
That's right.
So on your top line, what is the split between leisure and business travel? And where do you see the significant growth coming from?
As the portfolio stands today, I think only about 5% of our business comes from leisure.
Okay, so this new property would be that.
This will take more. This will take it up a little bit, but that's only 170 rooms. So we have a base of 3,000 plus rooms, 1,000 more rooms coming up. So clearly on a base of 4,000, if you have about 500 rooms on the leisure side, it'll still be in, about 10, 11, 12%.
Fair for us to assume that wedding season, winter travel, the seasonal factors that affect some of your competitors do not actually impact you, because December is a quiet time for corporate travel.
It is post 20th December. Our hotels are full last week. They're going to be full this week. So not a stretch, not too much of a pain point till maybe 21st, 22nd of December. But then it just kicks in very sharply after the first week of January.
Yeah.
So we expect that to do very well through January, February, and March. On the differential for us is maybe a little less between H2 and H1.
Yeah.
That's because of the stable nature of business travel.
Of course.
But from a leisure perspective, we've started this as a strategic initiative about 3 years back when we acquired the Duke's Retreat. We acquired this land in Goa. We run a small resort in Mud Island. So all that combined together is going to build up into a portfolio which is balanced out with about 20% of the portfolio in leisure and 80% in big city, big box business hotels.
I just wonder, sorry, not a question really, but I don't know if any of you, I have very fond memories of Duke's Retreat of the past.
So do we
all, as
And I'm
kids.
told that Duke's has been revamped to being a completely different and a fabulous property. I mean, at some point of time, we'll have a personal conversation on that, because that place in Khandala, that was
Lovely.
literally what Khandala was about.
What a view.
What a view,
Yeah.
exactly.
I think if we ever have an offsite, let's be realistic, we could be doing Dukes.
Please do. And I'll do my sales pitch on that.
Perfect.
We're going to
It's
be
a
ready from
win-win.
February onwards. Please come and stay with us.
Oh, fantastic.
Look, that's a stunning resort, and you cannot replace the views. The views remain same.
Yeah.
We're just enhancing and significantly enhancing the guest experience on the property, which is better rooms, better F&B, better amenities, etc.
Yeah, no doubt. Fond memories there. Just trying to get a sense of what the expansion plans are looking like. I mean, we know that there is a timeline right till 2027, which has been stated publicly, but is that on track? Would you like to recap? What are the kind of room keys you will be at by the end of 2027?
So we should be, as of the announced pipeline, about 4,000 plus keys in our portfolio. But we'd probably be adding more on the pipeline by then. So expect us to continuously grow, which means our target, my internal target is in the next maybe 3 or 4 quarters to get to pipeline plus operating hotels of 5,000 rooms, which means we should be able to add through business development activities another 1,000 rooms to the portfolio. Our balance sheet allows us that opportunity, and we'd like to leverage it.
Okay. So 5,000 rooms in another 4 quarters, so in a year from now.
To the pipeline,
To
yes.
the pipeline, okay.
How will you, okay, let's talk finances for a minute, right? Your net debt has obviously reduced post the QIP. Now you've talked about your expansion plans. How will you fund those? Are you going to be looking at adding some debt, or would you like to keep your debt lower? Do you have internal accruals, or is it the IPO proceeds that should suffice this expansion plan for the next couple of years?
So it is like this. The current pipeline that we've announced, we are good with internal accruals to service
great,
that.
okay.
So whatever comes beyond that may require some additional infusion of capital in some form or the other. We'll handle it when the time comes.
But not significant.
Not much.
Interesting. So, Sanjay, tell us if indeed you think of this hitting a period of 4 more years, and then you don't quite know what happens. How do you see Chalet from a slightly longer term perspective? Let's assume that this stays, then there's a small down cycle, and then an up cycle starts again, if you will. What does Chalet do? Do you retain this largely business and corporate or dominant position there? Is this the extent of the room addition, or is there a longer term plan that you've framed already? Maybe not completely communicated it, but are open to communicating right now. Any thoughts there?
No, so look, I'm not at liberty to discuss anything beyond what we've already stated publicly with the exchanges. We are a growing company. Our DNA is on development side.
Yeah.
And I think that'll keep pushing us to add more inventory to the portfolio. We see exciting times ahead for Chalet. At this point in time without numbers, but watch the space.
And you wouldn't want to, and correct me if I'm wrong here, but you've been slightly different than some of your peers in that you don't have gone the asset light way at all, right? You're doing a complete opposite thing. Do you foresee a change in that strategy as well in order to either enhance margins or otherwise?
Well, that option is available with us. I think at a certain point of time when you have enough inventory of your own, you can create a base to launch your own brand we potentially can. Whether we do it or not, right now things are going very well the way they are. We may not want to tweak what's going well too much, but at some point in time, we have the option of launching a brand of our own.
Are you looking at it? I mean, is it an option you're actively contemplating?
For last 5 years, we would have 10 conversations on the brand part. At
That's
this point
few.
of time,
That's few.
At this point of time, we probably would like to focus on what we're doing.
Okay.
But if something comes up, we'll come back to you.
Dr. Sethi, your annuity...
Sanjay is good,
Sanjay, okay. Dr. Sanjay, okay,
Sanjay,
Sanjay.
please.
You've got to get used to Dr. Sethi. That's what's going to happen at
Not
office.
something I'm going to get used to at this age.
Sanjay,
That's one good one.
I don't know why that's a bad thing, but never mind. You've got an annuity run rate of what, 160, 170 odd crores in the business at this stage?
On the annuity side?
Yeah.
Yeah, so that's going to, if you look at the current...
And also, what are the reason I ask you this, and let me just quickly complete my thought there. Where do you see that move up to in the next 2 to 3 years?
Sure.
Because the premium really comes when you have that sort of annuity business, right?
True. So we're expecting the current 2.4 million square foot of office spaces to throw up roughly around 300 crores of EBITDA when fully occupied, or say 95% occupied.
Where are we at right now?
We are at a run rate of about 20 crores right now, a month, which should head, which is almost 240 crores. But a lot of the leasing is still to happen.
Okay.
We're also building another office tower with about 800, 900,000 square feet of leasable space. So all put together by 2027, including the increase that we'll have till then, and that tower getting occupied, we should have a annualized number of about 400, 450 crores.
Wow, so from the current 170, 200 odd, we're looking at 400 odd in 2027.
That's a significant hedge we've taken in the business. You keep talking about the cyclicality of hospitality.
Yes, this is
We've sort of neutralized it with this
And the
hedge.
premium for most businesses comes from ARR, right? Where you have average recurring revenue. So I think this is critical in terms of annuity. Would you look to build that portfolio up more? Because it's stable. And maybe in partnerships, maybe in an asset-light form, because that keeps your cash flow low, manages that, helps you budget and still make some money.
That model works with building and renting out, right? So that's the model that we run in. And what we've done is really sweated the real estate assets that were with us already. So we build them on existing land parcels with the hotels already there. So they're co-located offices, which does 2, 3 things for us. Number one, land cost is zero. So incremental returns are significantly higher. They're comfortably north of 20%.
Any other land parcels available on your books?
We're building one, as I said, in Powai, the second tower there. As FSI and regulatory norms change, this could turn around more. But as of now, totally about 3.3 million square foot of office space.
Wow.
What are you seeing occupancy rates and your RevPAR kind of numbers for the second half? Because like you said, this is the fun stuff starts now, the good period starts now. So are you seeing these significantly higher?
We don't give forward-looking numbers, but I'm comfortable with stating that double-digit RevPAR growth over the same period last year is pretty much on the cards. And it was a good H2 last year.
Yeah.
So we're going to sort of outperform that significantly.
Just one final question from my end. Everybody's one pain point for a lot of companies, if not all, are heightened costs, raw materials, manpower, so on and so forth. You are expanding. Is that a pressure for you as well, or not really?
I think on the construction side, yes. That's where probably the costs did go up for almost everyone in the country. Operating side, I think we've done a good job, and our margins are well protected. We should improve on those going forward.
Just one last question from my end as well. There was a one-time deferred tax reversal. How does that affect the outlook on financials for FY25? What's the impact that we should expect?
It's an on-book entry.
Okay.
There was a provision that was created, which in the new finance bill this year, you're not allowed to provide for the escalation, and therefore we had to write it down. But no cash impact.
Okay. So it was an accounting change that was made. Okay.
All right, thank you so much for coming in. An absolute pleasure speaking with you this morning.
Thank you, ladies. Thank you, Neeraj.
I was wondering to address him as
Thank
Sanjay
you,
or Dr. Sanjay
Sanjay.
Sethi.
I'm going to make sure. Thank you, Sanjay.
Sanjay, thank you for coming in. All right. So
And we'll take him up on the Duke's retreat offer, by the way. We should do the
We've got
offside
to wait
there.
till Feb.
Yeah, wait till
Hold our
Feb.
horses, guys.
Neeraj has got all his childhood
the
memories.
childhood memories are there.
Fantastic place, no doubt. All right, thank you so much. Great to have you here.